Joining me today is New Hampshire Representative Neal Kurk, who's chair of the House Finance Committee. So Neal, a couple of other votes that happened, there were a lot of other votes that happened, 400 or 500 I imagine, but a couple of them that I want to touch base with you is the Planet Fitness bill. Tell me about that.
Planet Fitness is a New Hampshire-born company that is gone big nationwide, and they're thinking of going public. That is to say, they're going to convert from a private company to a public company.
So their stock on the stock exchange.
Right. And they discovered that they would be subject to a major tax hit.
The owners.
The owners would be, and the investors would be subject to a major tax hit in New Hampshire. So through former Governor Benson, who's a member of their board, they went to the legislature and said, look, there's a problem here. Can you guys help us fix it? And we looked at that and we said, yes, there is a problem. And while you may be the people who brought it to us, it's a problem that's far larger than a single company.
So what is the problem? And because some people have said this is just another corporate giveaway. Why is it? What is the problem from a policy perspective?
In our business profits tax, we have a way to capture an increase in the value of a business and tax it. So once they do an IPO, the value of the stock is determined, the value of the business goes up, they would have to pay taxes on that.
Even though they don't, so I have a share, it's worth, say it's $1. I do an IPO, I still own that share, but because it's freely traded, it could be worth $10.
Right.
I haven't received $10, but I would have to pay a tax.
You might not have to pay a tax individually, but the company's value has gone up, and as the value goes up, that's considered part of their profits for tax purposes.
So the business profits.
Exactly. And so the company, on the shares that remain, would see a significant increase in its taxes.
So if the company owned 100 shares in their treasury stock at $1, then that same 100 was worth each $10 each. That's an increase in profits.
Exactly. For our tax purposes. Now, we're the only state in the country that does that. No other state taxes that. And so we're non-competitive, number one. Number two, why would you start a small business in New Hampshire with a gleam in your eye of becoming a success, knowing that this monster, or that's probably too strong a word, that this major tax increase is going to hit you when you're finally successful? Now, you have to understand that the solution to this was to give the business a choice, pay now or pay later. So if you don't want to pay up front, you can amortize or depreciate the increased value of the company over a number of years, and the state will get its money, but in effect in installment payments. But it was pointed out that if a company takes advantage of this, as Planet Fitness might, they could leave the state the next year and avoid having to pay those future tax increases. So there is some risk involved here, but in order to make ourselves competitive with other states, and to be fair, we took this one company's problem and generalized it to all other companies and put forward a bill, Senate Bill 550, I believe, that's going to the governor, and she'll have to sign that or reject that, veto it in the future.
Do you think she'll sign it?
I don't know. She's expressed concerns, but it's a difficult problem that isn't partisan, really. It's what is the best tax policy for New Hampshire? Because there are pros to passing this bill and there are cons. It's not obvious one way or the other, and it's not a matter of philosophy.
What are the cons?
The cons are that we will be setting up a situation that encourages successful companies to start in New Hampshire but leave the year after they become successful. That, in effect, is the problem.
If you don't pass that, haven't you really incentivized that?
They'll leave before they become successful, just before the offering, and that's what Planet Fitness is faced with. If we don't make this change, they can move their headquarters and 200 employees anywhere else they want, avoid this tax, and we've lost the revenue that they might be expected to pay us in the future if they didn't go. But if we change the law and they avoid the tax up front and have to pay it over time in the future, they might decide later on, the year after or 2 years after, to leave the state and take their employees with them and avoid paying those increased taxes. It's a conundrum for New Hampshire.
It seems to me the longer they stay, the less likely they'll leave.
Agreed.
And that one big hit, I mean, they have to come up with cash, so they have to sell treasury stock to cover it.
Perhaps.
I'm just trying to figure out how they would actually come up with it, because it's a paper transaction.
Yeah. So I voted in favor of it. I think that on balance, it's a better policy, and I'm willing to take the risk. If it turns out that there's a mass exodus of these companies in the year after they've gone public and been very successful, perhaps we can relook at the policy. But at the moment, I think it's essential that we do this.
And is this part of the overall picture of making businesses, making New Hampshire attractive to businesses?
Yes, and in two ways. Number one, when a policy is brought to our attention that adversely affects business and is unfair, then we're willing to fix it and look at it. The second thing is, this happened very late in the session. Now, I can't tell you why these folks didn't realize they had a problem till then, but we were able to get this information to act quickly on it. And so this is a very business-friendly state. When there's a problem, the legislature gets involved and gets the job done and gets it done quickly. That says something very, I think, very important to business, that this is a state that you can work with.
Okay, and Neal, with that, we've got to leave it. We're out of time, but thank you so much.
My pleasure.